Hello and welcome back to my channel. This is the second installment in my Vanguard Portfolio updates. The reason why I'm creating this series of videos is twofold. Firstly, selfishly, it keeps me on track and forces me to make conscious decisions about my investments, as I know I'll be sharing them with people like you. Secondly, it allows you, the viewer, to see exactly what it's like to invest without any censoring whatsoever. If you've not watched the first video that I created on my Vanguard portfolio, I will link the video above. Go check that video out first, because I go into more detail about what led me to investing and the journey I made getting out of debt and then creating an investment portfolio. So this month for me is a milestone. It marks the first full year of investing. And I can think of no better way to celebrate than for you to hit the like button and subscribe to my channel to keep an eye on my investing journey, as well as any other content I create about personal finance. So the first video I created about my Vanguard portfolio was in April 2021, 2 months ago. In that video, my portfolio had made 21.4% year-to-date returns. The total invested with Vanguard at that time was £6,331.61. £5,040.54 within my SIP or my self-invested personal pension, and £1,291.07 within my stocks and shares ISA. So I was obviously happy with these returns, and truthfully, I didn't expect the fantastic returns to continue. The truth is, I'm investing for the long term, and I'm going to utilise cost averaging so that when the returns are high, I can celebrate, and when returns are low, I'll just buy more shares because they're on sale. So since my first video, I've really focused on buying more investments with any extra money that came my way, even if it was just a small amount. I added any spare money I could into a separate space in my Starling bank account, and as soon as the amount got big enough that I wanted to invest, I would transfer it over immediately. For me, this psychological trick is the best way for me to boost my own investing. If you don't use a challenger bank such as Starling or Monzo, I urge you to take a look at them and consider swapping. By utilising the separate spaces or pots function, you can treat them as a separate bank account, which is a great way of keeping any extra money out of you. This for me prevents me from spending that money on anything unnecessary. So I also turned 32 in May, which is another reminder that I need to invest as much as I possibly can, as soon as I can. Not that I'm old, but to allow my portfolio to grow as much as possible, that I can start to withdraw from it when I'm in my 50s, and to take advantage of compound interest, I need to make this pot as big as possible, as soon as possible. Don't get me wrong, this does not mean that I'm not going to enjoy life now, because I have money allocated for that every month. But I am focusing on living below my means. But the goal for now is to increase my income as much as I possibly can with side hustles or extra shifts at work to direct that money into my Vanguard portfolio. So let's take a look at the portfolio for this month. Okay, so let's take a look at the Vanguard portfolio. So as you can see straight away, the value of the portfolio is £7,287.38, which is up from 2 months ago, £955.76. And that's broken down, as you can see here, within my pension and my stocks and shares ISA. So let's take a look at the pension first. So as you can see here, with the pension, the account value is £5,319.57, with a total gain since I started it a year ago was £766.32. So that has gained a value of £279.03 over the last 2 months. As you can see here, as of this tax year, I've put in £160 of my own money. So since April, that's been 2 payments of £80, and I've had tax relief of £40. So whenever you put in £80, you get 20% tax relief, so £20 per month. So if we have a look at the investments, just the same as 2 months ago, I've not changed any funds that I'm investing in. I'm sticking to the Life Strategy 100% equity fund. And if you want to go a little bit more in depth into that fund, have a look at the first video that I did where I take a look at how it's diversified and globally diversified in particular. So as far as my pension goes, I'm pretty happy with a 21.29% rate of return. I find it really interesting where on my other social media platforms I talk about an average annual return of around 7 or 8%. Just to give you an example of how, you know, when you go to retire that you're going to have a decent sum of money. And people think that those sort of returns are unrealistic. But over the past year, I've got 21.29% 0.29%. Now, don't get me wrong, I'm not expecting that for the rest of my investment journey. I'm expecting it to go, minus, and sometimes as low as 2 or 3%. But the fact is, I've not timed this market perfectly. I'm not an investment genius. Invest regularly every single month and cost average. That's all I've done. I've not done anything special, and I've just chosen a really stocks and shares or equity heavy funds to invest my money into because I have a longer period of time to invest. So as you can see, that's the direction you want to go. It goes up and it goes down, it goes up and down. It all does little spikes or when I input money into the account itself. But over time you can see I'm averaging and it's going up, which is obviously the direction that I'm looking for. So let's take a look at my ISA. So the value of the ISA as of today is £1,967 ATP, with a current rate of return of 22.66%, which again, is slightly down from 2 months ago, but you can't complain about those sort of returns really. So with that value of the ISA, it's gone up by £676.73, and as you can see in the graph, that's from a spike of me investing a bit more money that I have left over. Some of that was from free shares from free trade. So as soon as I get a free share, unless I like what it's investing in, I'll sell it immediately and then keep that as cash until I want to put it into my Vanguard account. So if we take a look at the holdings, just as I am doing with my pension in the SIP, I'm investing all the money currently into the Life Strategy 100 equity fund. And it's an accumulation fund, which, as I state in my previous video, any money gained in terms of interest or dividends will be reinvested into the fund. So over time, compound interest will work in my favour. So that is my Vanguard portfolio as of June 2021. I'm going to stick to the Life Strategy 100% equity fund at the moment, but I think in the future I am going to start investing into other funds to add to it. I just think simplicity is the best way. It prevents you from procrastinating, it prevents you from overcomplicating things and potentially just not doing anything as a result. So for me, being as aggressive as I can is still what I'm going to do, and is what I'm going to plan to do for many years to come. So for the last couple of weeks, I've been reading an interesting book called Own the World by Andrew Craig. This book covers many of the topics I talk about on this channel, but in particular it focuses on diversification. A big topic in this book is precious metals and why you should have a portion of your money invested in it. So this is a topic that I have researched previously, but after reading this book, I've decided to take the plunge and buy just a few shares inside a physical gold ETC. I've done this using my free trade account. Now I'm not going to track this as closely as my Vanguard account, but I thought it's worth mentioning as it will play a small part in my overall portfolio. If you fancy setting up a free trade account, you and I can both get a free share worth up to £200 if you follow the link below in the description. So the piece of information inside the Own the World book that convinced me was a discussion on the negative correlation between interest rates and the price of gold. Without going deep into this, to keep it simple, it is not guaranteed, but usually the gold price goes up when interest rates go down and down when the interest rates go up. This is because rising interest rates make stocks, government bonds and other investments more attractive to investors. Lower interest rates make these alternative assets less appealing, driving investors towards gold and increasing the demand and the price accordingly. The plan is to keep a small percentage of my portfolio in gold, so I'm going to aim to have no more than 5% of my total portfolio. As I've only just started, the percentage this month only sits at 1%, so I plan to purchase more in the coming months. So if this video has in any way grabbed your interest and has made you think about investing, I urge you to learn about it. I'm happy to answer any questions about Vanguard or investing that you might have, so don't hesitate to leave a comment on this video or just message me on any of my other social media accounts that I'll leave links to below. So that's it, that's my Vanguard portfolio as of June 2021. I'm going to do more regular updates as the first video proved to be quite popular, so make sure you subscribe to this channel to catch those in the future.